Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Rocket Lab's rally may be just the beginning. This article was written by Daniil Sereda. Summary. Pause. Rocket Lab has delivered over 550% returns since my November 2024 buy rating initiation. The upcoming Neutron rocket launch in mid-2026 is a major catalyst, targeting the lucrative medium-lift constellation market with a reusable, cost-effective design. I think RKLB is nearing an EBITDA break-even point as R&D spending on Neutron peaks and gross margins expand toward a non-GAAP target of 44%. Strategic contracts with the Space Development Agency totaling over $1.3 billion solidify Rocket Lab's role as a critical partner for U.S. national security. Despite high valuation multiples, RKLB's consistent revenue beats and massive $770 billion total addressable market by 2030 support a continued bullish investment thesis. I am Daniil Sereda, Chief Investment Officer at a family office. I analyze information that ordinary retail investors do not have access to and lead the investing group Beyond the Wall Investing. I keep my buy on RKLB stock in place. Rocket Lab Corporation RKLB turned into one of my most successful bullish picks on Seeking Alpha as it soared by over 550% since my buy rating initiation in November 2024. It had some challenges in terms of the market's narrative in the latter half of calendar 2025, but a very solid December. The stock added 65% in December 2025 alone, as well as the strength continuation in January 2026, helped RKLB hit fresh ATHs lately. I know that for some investors, RKLB might seem pricey after the bull run it has experienced, but in my opinion, the upcoming catalysts expected this year make RKLB reasonably valued for the level of growth it can achieve ahead. Their Electron rocket has become the second most frequently launched U.S. vehicle, but the real game changer should come in 2026, when RKLB launches its reusable medium-lift vehicle. I believe Neutron will capture the main share of its small-lift niche of the constellation market over time, and it can do so quite quickly. On top of that, I really like RKLB's evolution into an end-to-end space systems powerhouse, which is exactly what it needs to break even faster than it's currently viewed by the consensus. If I'm right on this assumption, RKLB will be able to beat the consensus and hence get the market's continued bullish support. The high multiples we see now will not matter over time in this case. Why do I think so? Let me start with RKLB's latest financials first. The firm's sales reached $555 million on a TTM basis as of Q3, which is 52% above last year's figure. At the same time, the firm's GAAP gross margin hit 37%, negative 34% 5 years ago, and the management guided for 38% in Q4 2025, and approximately 44% in non-GAAP GP margin, thanks to a higher mix of launch contribution in the quarter, as well as underlying improvements in launch ASPs and greater launch overhead absorption, per the latest earnings call. RKLB's EPS is still negative, but in Q3, we saw it coming in at just negative 3 cents, while the market was expecting negative 10 cents per share. So the break-even trajectory looks great. Also, RKLB's balance sheet looks solid, with approximately $1 billion in cash and liquidity, and only approximately $517 million in total debt. The above balance sheet's capacity should be enough for launching Neutron this year, which is the main catalyst for Rocket Lab these days. They should have launched in calendar 2H 2025, but the management eventually shifted the date to mid-2026 to make sure there are no hidden technical issues in the system. According to the company's statement that dates back to 2021, about 98% of all payloads launched through 2029 don't require the massive heavy lift capacity of a Falcon 9. So that's the niche RKLB is trying to focus on with Neutron, which can carry 13,000 kilograms to LEO. The rocket itself should be reusable thanks to its captive fairing design, engine type. It utilizes liquid oxygen and methane versus traditional kerosene, and the tech features developed at RKLB internally, so it's a massive breakthrough that can attract a lot of customers. So far, RKLB has already signed 3 fully priced Neutron missions in its backlog, and I assume there will be more once the first rocket is launched. Hopefully, it's going to proceed with no accidents. One of the most overlooked catalysts in RKLB's growth story, in addition to Neutron, is the company's profitability gains. I've already called Rocket Lab an end-to-end space systems powerhouse, but I haven't explained why it's important. RKLB is basically managing the entire mission lifecycle, running a diverse family of spacecraft platforms, Photon, Lightning, and the mass-manufacturable Flatellite, under the Space Systems Division's umbrella. The SS segment's revenue went up by 74% year-over-year in the latest quarter, and I think it brings in higher margins. That's the mix shift investors are willing to see in any growth company. Now, Rocket Lab can control the production cycle by 3D printing engine and reaction wheel components, while also having access to solar cells and advanced sensors. This represents a major competitive moat in terms of supply chain control. With all that in mind, I expect RKLB to have a positive adjusted EBITDA for 2026, thanks to the expanding gross margins. Plus, we heard on the call that the firm was already nearing peak R&D spending on Neutron, and that's why the R&Ds won't press operating margins as heavily as before. I'm optimistic that with the impressive strides we've made towards this milestone, we're approaching peak Neutron R&D spending and are on the path towards meaningful operating leverage and positive cash flow in the future. Source: RKLB's Q3 earnings call. Another catalyst that I see comes from SDA, the Space Development Agency. In December 2025, Rocket Lab and SDA signed an $816 million contract to build 18 satellites for the Tranche 3 tracking layer. Overall, RKLB is holding over $1.3 billion in cumulative SDA contracts. I think this places the firm at the same level of U.S. national security as Palantir Technologies Inc., PLTR, or Lockheed Martin Corporation, LMT, but in its own unique niche. In January 2026, the Secretary of Defense Pete Hegseth visited RKLB's facility. We can't know what the next steps will be, but I think it's getting clear that the Pentagon's shift toward resilient space architectures can involve Rocket Lab in future processes and supply the company with lucrative contracts. Now, let's turn to RKLB's valuation. The stock is currently trading at 77 times sales, but when we take a closer look at consensus estimates for the next few years, we see that the FY 2026 PS effectively drops below 52x. We don't have any major public peers to compare RKLB's business model with. SpaceX is still private, but I think that the current premium is fully justified for the level of growth that may come next. They've been beating on the top line since mid-2024, and I think they can continue doing so throughout 2026 to 2027. Assuming $1 billion in FY 2026 revenues and the same 52x PS multiple, I believe RKLB can reach a market cap of $51 to $53 billion by the end of 2026. This gives me an upside of 12 to 13%. It might look modest, but it's a positive number that can actually be bigger if we see a higher top-line expansion with more contracts flowing to the firm's backlog. Where can I be wrong? The biggest risk to RKLB for 2026 remains the Neutron launch. If we see a failure during the maiden flight this year, the stock will likely contract dramatically because the market will start to reprice the company's future contracts and backlog expansion to the downside. Also, we have to keep in mind that RKLB competes with SpaceX, which has a better pricing power thanks to its scale. My valuation analysis, which showed only 12 to 13% in upside potential for RKLB this year, may be insufficient for the level of risk that growth investors are taking. The bottom line: despite the risks, I like Rocket Lab's fundamental transformation, which can only accelerate throughout 2026-2027 as the firm launches Neutron and scales it. Also, the profitability gains and EBITDA break-even by the end of 2026 look quite achievable thanks to the trends in GP and OPEX. The prospective space tech market size of approximately $770 billion by 2030 looks attractive, and RKLB appears well-positioned to capitalize on its growth over the next decade. Since I can't really quantify any future contract additions, I decided to leave my buy, even amid the seemingly modest upside potential that I calculated today.
Hey viewers, don't forget to like, subscribe, and add our channel to your favorites. We will continue to provide you with more insightful stock analysis.